There were a couple of changes out of Ottawa this week. It doesn't really affect the Edmonton market as much as markets, let's say, like Vancouver or Toronto, but I'll explain. Hi, I'm Brent. I'm the team leader at the Macintosh Group at Remax River City. We sell homes in Edmonton and Sherwood Park. There were some changes from CMHC, or the Canadian Mortgage and Housing Corporation, to increase the maximum level of lending on a property from 1 million to 1.5 million for a CMHC or a high ratio mortgage loan. And that's when you're putting down less than 20%. And after 20%, it becomes a conventional mortgage. So on these high ratio mortgages, you can now borrow up to 1.5 million. Here in Edmonton, when the median sales price is under $500,000 for a single family home and under $200,000 for a condominium, apartment style condominium, I don't see that affecting us very much. If you're borrowing over $1 million, you should be probably putting down more than 20% here in Edmonton. It's going to help, again, first home buyers in marketplaces like Vancouver and Toronto more than here. But again, that's kind of a neat change. The other change is to help affordability, changing the maximum borrowing time from 25 years up to 30 years. And what does that mean in real numbers? For an Edmonton buyer who might be borrowing $400,000, that can lower your payments by about $200 per month. So instead of paying $2,270 a month, maybe in a mortgage payment, you'll lower it to $2,070. So it saves you about $200, and that's based on a 4.69% interest rate. If that rate stayed the same for all 25 years of that mortgage, you'd be paying back the original $400,000 that you've borrowed plus about $280,000 in interest. If you borrow for 30 years, that's going to raise it by about $65,000 more in interest, and you'll be paying $345,000 in interest over 30 years. So if you need it to qualify to buy your first home, fantastic. But as soon as you can, and as soon as you start being able to afford more, I would suggest you raise your payments and try to go back to 25, or even if you can, down to 20 years. So you're paying the bank less in interest. Of course, the banks are excited because they're going to make more and have you in their grasp for 5 extra years. But if you can afford to, try not to amortize over 30 years for the entire length. Use it as a stepping stone if you're a first home buyer or needing help to qualify to lower those payments, fantastic. But as soon as possible, get back down to something lower. I hope that helps. Thanks for watching.